Good morning, investors, and welcome to your StockSense morning brief for Tuesday, November 11th, 2025. I'm Malik, and we're here to bring you the essential updates from the Pakistan Stock Exchange to help you navigate your trading day. Let's kick things off with a look at yesterday's market performance. The KSE-100 Index had a strong showing, surging by an impressive 1,945 points, or about 1.2%, to close at 161,538. This was a notable rebound, especially when compared to Friday's modest gain of just 0.3%. Trading activity was robust, with nearly 785 million shares changing hands, valued at around 36.4 billion rupees. Market breadth was clearly positive, as advancers significantly outnumbered decliners, with 292 stocks rising against 136 that fell, and 49 remaining unchanged. Diving into the sectors that had the most influence on the market, we saw some key movements. The textile composite sector made a substantial positive impact, adding over 54 billion rupees to its market capitalization. This was a significant boost to the overall index. Also contributing positively was the glass and ceramics sector, which saw a net change of around 170 million rupees, indicating healthy activity there. On the other hand, exchange-traded funds experienced a slight negative impact, with a net change of about 2.6 million rupees down. From a technical perspective, the KSE-100 appears to be presenting a mixed but generally optimistic picture. Many of the short and medium-term moving averages, like the 10-day and 20-day exponential moving averages, are signaling buy, suggesting some underlying bullish momentum. However, some longer-term simple moving averages are still indicating sell, pointing to a bit of caution. Looking at pivot points, a key resistance level for the index could be found around the 169,000 mark, while immediate support appears to be holding near 155,300. Investors should keep an eye on these levels for potential breakouts or pullbacks. On the corporate front, we have no specific board meeting scheduled for today that would significantly impact the market, nor are there any last-day entitlements for dividends or bonuses. We'll keep you updated if any major announcements come through later in the day. Now, turning to the broader economic and market news, it's been a busy period, dominated by discussions around the proposed 27th constitutional amendment. There are significant concerns emerging from various fronts. Business leaders are warning that such sweeping constitutional changes, especially if rushed without broad consultation, risk deepening public mistrust and unsettle investors, thereby injecting fresh uncertainty into an already fragile economic climate. Legal experts have also voiced strong apprehension, suggesting that the amendment's proposed tweaks could effectively dethrone the Supreme Court, raising worries about the rule of law and legal certainty, which are crucial for attracting both local and foreign investment. Adding to the political landscape, an opposition alliance has announced a nationwide protest movement against the 27th Amendment, signaling potential political instability and civil unrest, which is generally a negative for investor confidence. However, there's a silver lining. Prime Minister Shehbaz Sharif has ordered the withdrawal of a clause seeking to grant immunity to the Premier in the 27th Amendment, emphasizing accountability. This move could be seen as a positive signal for governance and transparency, potentially mitigating some of the negative perceptions around the amendment. In other news, the security situation seems to be improving, with the Inter-Services Public Relations reporting that at least 24 terrorists were killed in intelligence-based operations in Khyber Pakhtunkhwa and Balochistan. Enhanced security often contributes to a more stable environment, which is generally positive for business and investor confidence. We also have some positive economic news from Punjab, where the provincial government's Apni Chhat Apna Ghar initiative is gaining traction. This program offers interest-free housing loans, aiming to stimulate demand in the construction, cement, steel, and allied industries. With over 104,000 loans dispersed so far, this initiative is expected to boost economic activity and create jobs. Meanwhile, the auto industry is gearing up for a policy battle as the government finalizes the auto industry policy for 2026-21. This new policy is set to align with IMF-backed tariff reforms, which could cap tariff rates on finished goods. While this might increase competition for local auto assemblers, potentially impacting their profitability, it could ultimately benefit consumers through more accessible imports. Looking at institutional flows, foreign investors were net sellers yesterday, pulling out about $2.6 million from the market. This selling was primarily driven by foreign corporates, who offloaded a significant amount. Conversely, local institutions were net buyers, injecting a similar amount into the market. Breaking this down, mutual funds were notable net buyers, adding about $3.2 million, and broker proprietary trading also showed strong buying interest, with a net inflow of nearly $1.6 million. Overseas Pakistanis were also net buyers, contributing about $1.2 million. Individuals, on the other hand, were relatively neutral. My take is that yesterday's strong market performance, despite the ongoing political and constitutional uncertainties, indicates a degree of resilience among investors. The positive economic initiatives like the housing program and improvements in the security situation might be providing some underlying support. However, the contentious debate around the 27th constitutional amendment and the potential for increased political instability will require close monitoring. Investors need to remain vigilant and consider how these macro developments could influence market sentiment and specific sectors in the coming days. That's all for your Stock Sense Morning Brief today. Thank you for tuning in. Remember to subscribe to our YouTube channel and podcast for daily updates. Until next time, I'm Malik, and happy investing.